Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, June 7th, 2024. So another week is in the books. Next week we have to look forward to the Fed speaking on Wednesday. Interest rate decision. They won't make any changes, but the important thing when it comes to the meeting is just what they signal going forward, and whether the market, and really more importantly, how the market interprets that signal. So I just finished making the premium video for the folks in the gold room, and here's the thing: it's a little bit of a weird spot. I believe last Friday when I was with you guys, I told you that I would say to focus on day trading opportunities in this market. It seems like a little bit of a tough pill to swallow when you say to day trade and the market has made a new all-time high as of today. But at least from my bias, things are just not overly clean. So I'm going to show you two signals that conflict with each other. And at least until Wednesday, we won't really have an answer, right? So the way that I'm looking at things is day trade from Monday to Wednesday. After Wednesday, probably starting on Thursday, I wouldn't make any decisions on Wednesday, even after he finishes speaking. But by Thursday, what I would be looking for is some expansion of market breadth. And I'm going to show you the signal or the ticker that I used to track that. So I'm going to look at just two things with you guys today in this video. I'm going to look at the SPY, and then I'm going to look at market breadth. So if we look at SPY here, we have a Max Bull weekly chart. We have a Max Bull daily chart. We have a new daily squeeze. Now I am using a faster version of the squeeze, so you may or may not have this on your traditional squeeze, but at least on the faster version there is a one dot squeeze so far. And typically when you give me a chart that says Max Bull plus squeeze, I buy that, right? We look to buy that pretty easily and usually aggressively. The question is this the same thing? And really, we won't know the answer to that. I don't believe we'll actually know anything until Wednesday. So the SPY right now, the daily chart on SPY, is the bullish part of this argument. Certainly, very notably, I would say it's Max Bull. Here's where it gets a little funky, because if you just look at the index, if you just look at the S&P or the NASDAQ, everything looks good. Even the DIA is starting to improve a little bit, and you're starting to see improvement in the banks, especially as of today, which is a very necessary thing. But here's my concern, or here's my conflict with what we just looked at. And it really comes from an internal, and it's the SPX A50R. Put a money sign in front of that, SPX A50R. This is the number of stocks in the S&P that are above their 50-day moving average. And the S&P made a new all-time high today for about a nanosecond, but it was there. Made a new all-time high today. You would expect this number of S&P stocks to be above their 50-day moving average, which is a very low bar, especially considering that the S&P just made a new all-time high. You would expect this number to be up here somewhere, maybe in the neighborhood of 0.7 to 0.8. In an extraordinarily good market, above 0.8. But look where it is, 0.479, right? So the S&P made a new all-time high, and less than 50% of the S&P 500 companies are above their 50-day moving average. That is a very large and, in my opinion, notable conflict. Now, here's kind of the thing. Into Fed, I don't expect this to change. I think this will just trade sideways into Fed. After Fed, if it does this, then we know we got something, and we can get pretty aggressive all the way till at least June OPEX, 2 weeks from now. In the event that after Fed this chart goes this way, then I would continue to say the same thing and say that it would be a day trading situation. The reason I would say it's a day trading situation is because the overall charts, the SPY and the Qs, are still very bullish, but if you continue to see structural problems inside of the internals, then it really limits the quality and the believability of the rally. So I'll go ahead and wrap it there. I just wanted to show you two signals that I think are the most interesting signals that we looked at together in the premium video. One, the wildly bullish SPY chart on one end, contrasted with the wildly cautionary internals chart that we're looking at right now. So you combine wildly bullish and wildly cautionary, you end up right in the middle, right? A little bit of combine cold water and hot water, you end up with neutral water. When you have neutral water in this convoluted analogy that I'm making, that really bodes well for day trading. And then we'll follow this chart, especially in the next video that I have with you guys next Friday. We'll follow this chart to see if it's improved, and then that would set us up for the summer rally if the Fed goes well. All right, guys, that's my time. Leave us a like before you go somewhere else on the YouTube. Leave us a comment if you have a question, and I hope you have a good rest of your day. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.